The cryptocurrency market is experiencing a period of turbulence. Bitcoin, the flagship cryptocurrency, has stalled at $95,500. This plateau comes amidst a broader dip in the altcoin market, fueled by the U.S. Securities and Exchange Commission's decision to delay decisions on several Bitcoin ETF applications. While Bitcoin's price has remained relatively stable, altcoins like XRP, Dogecoin, and Avalanche have experienced more significant declines. These cryptocurrencies, often more volatile than Bitcoin, are particularly sensitive to regulatory uncertainty. The SEC's delay has introduced a layer of doubt, leading some investors to seek safer havens. This contrasting performance underscores the growing divergence between Bitcoin and the broader altcoin market. Bitcoin, increasingly viewed as a store of value akin to digital gold, appears more resilient to short-term regulatory headwinds. Altcoins, often tied to specific projects or platforms, face heightened scrutiny and risk perception. The overall cryptocurrency market capitalization has taken a hit, reflecting the recent price movements. Bitcoin, despite its relative stability, has seen its dominance slightly decrease as altcoins experience more pronounced losses. This dip in market cap highlights the interconnected nature of the cryptocurrency market. While Bitcoin often sets the overall trend, altcoins contribute significantly to the total market value. When altcoins face downward pressure, it inevitably impacts the broader market sentiment. The current situation demonstrates the vulnerability of altcoins, especially during periods of regulatory uncertainty. Despite the market dip, Bitcoin's resilience is notable. Its price has held relatively steady, suggesting that investors remain confident in its long-term prospects. This resilience further solidifies Bitcoin's position as a hedge against traditional market volatility and a potential store of value in an increasingly uncertain world. Despite the SEC's delay in approving a spot Bitcoin ETF, institutional interest in Bitcoin remains strong. In fact, recent data indicates significant inflows into Bitcoin ETFs, particularly those offered by established financial institutions like BlackRock. This continued institutional interest underscores the growing acceptance of Bitcoin as a legitimate asset class. BlackRock's foray into the Bitcoin ETF space has been particularly noteworthy. As the world's largest asset manager, their involvement lends significant credibility to the cryptocurrency market. Their continued pursuit of a Bitcoin ETF, even amidst regulatory hurdles, signals a belief in the long-term potential of Bitcoin. This institutional interest provides a counter-narrative to the short-term volatility driven by the SEC's delay. While retail investors might be swayed by immediate regulatory developments, institutional players appear to be taking a longer-term perspective, focusing on Bitcoin's underlying fundamentals and potential for growth. The SEC's decision to postpone decisions on Bitcoin ETF applications has injected a dose of uncertainty into the cryptocurrency market. This uncertainty has particularly impacted short-term traders, especially those focused on altcoins. These traders, often relying on momentum and short-term price swings, are now grappling with the ambiguity surrounding the SEC's next move. The delay has introduced a layer of risk that many short-term traders are unwilling to bear. This has led to a pullback from altcoins as traders seek to reduce their exposure and minimize potential losses. The heightened volatility in the altcoin market reflects this sentiment. While the SEC's delay has undoubtedly created short-term uncertainty, it's crucial to remember that this is not a rejection. The SEC is taking its time to thoroughly evaluate the applications, ensuring they meet the necessary regulatory standards. This delay, though frustrating for some, can ultimately lead to a more robust and regulated Bitcoin ETF market. The cryptocurrency landscape extends far beyond Bitcoin's price movements. PayPal, the payments giant, is facing scrutiny over its stablecoin, highlighting the increasing regulatory attention on this segment of the market. Meanwhile, in Canada, shifting political dynamics are influencing the country's approach to cryptocurrency regulation, demonstrating how political factors can shape the industry's trajectory. PayPal's stablecoin, designed to offer the stability of fiat currencies while leveraging blockchain technology, has attracted regulatory attention. The ongoing investigation underscores the challenges faced by traditional financial institutions venturing into the cryptocurrency space. Meanwhile, Canada's political landscape is directly impacting its approach to cryptocurrency regulation. The upcoming elections and potential shifts in power are creating uncertainty for the industry, as different political parties hold varying stances on cryptocurrencies. These developments highlight the evolving and multifaceted nature of the cryptocurrency ecosystem. While Bitcoin's price often dominates headlines, it's crucial to recognize the broader forces at play. Regulatory scrutiny, political shifts, and technological advancements will continue to shape the future of cryptocurrencies.